I mean, I think the bigger risk is missing out on the rest of this bull market, which is going to last for quite some time. So yeah, I mean, and I also think that the risk is going to be that there are going to be a lot of people that are going to take profits too soon. They're going to say, "Oh, I've doubled my money or I've tripled my money. Let me get out."
And we've got some pretty big moves in the markets. Gold starting to break out and run higher. We had silver post some pretty big gains. Silver has run all the way up, hit our 20% target yesterday, which was pretty exciting. And if we take a look at platinum and palladium, just insane moves here on platinum, up like almost 10%. It just continues to push higher. And we've got palladium up about 0.5% this morning. Platinum's up about 2%, 2.5% this morning, but we've got some pretty big moves going on in this space.
Something critical is happening beneath the surface of the gold and silver markets, and most investors are completely missing it. While prices are moving higher, the real story isn't the rally itself. It's what happens during the pullbacks, where capital is flowing, and why the biggest risk right now isn't volatility, it's exiting too early. Schiff and Chris Vermeulen are sounding a warning that goes against mainstream narratives. Prices are still too low, buying pressure is relentless, and short-term sell-offs are designed to shake out weak hands, not end the bull market. In this video, we'll break down why sharp corrections don't change the trend, why gold miners could recover faster than stocks in a meltdown, and why the silence from financial media may be the biggest signal of all.
I think any decline like the one we had an hour ago, is a great buying opportunity. I don't expect there to be that big a decline because I don't think the markets are going to make it that easy for people to buy because I think prices are still much too low. And I think at this point, you have a lot of investors who want to get into this market. And so there's too much buying beneath the market for the market to correct that substantially. I think there will be sharp sell-offs to kind of get the day traders who are trying to be cute and just maybe come into the market with some leverage positions intraday. I think, they still have to have risk there. It can't be just like one-sided, can't lose. So keeping the speculators honest, I think you're going to see plenty of sharp declines like we had today, but not major declines. So I think you've really got to get into this market to the extent that we do see sell-offs. I expect them to bounce back very quickly. If we go into a major stock market meltdown where stock markets are down, 20, 30, 40, 50%, yeah, gold stocks could get dragged down, but I don't think they'll go down as much, and I think they'll come back much quicker. And a lot of it depends on what gold does. I mean, if we see a major drop in the stock market and we also see a drop in gold, okay, then the gold mining stocks are going to get hit. But if we see a surge in the price of gold, if the money that's leaving the stock market goes into the gold market instead of the treasury market, it'd be hard to imagine, gold moving up substantially and the gold stocks ignoring that and going down. You would think that they would rise as well. I mean, I think the bigger risk is missing out on the rest of this bull market, which is going to last for quite some time. So yeah, I mean, and I also think that the risk is going to be that there are going to be a lot of people that are going to take profits too soon. They're going to say, "Oh, I've doubled my money or I've tripled my money. Let me get out." And, look, selling some, taking some of your profits off the table, I suppose I can't necessarily argue with that as a risk management strategy. But I think that we have a long way to go. And so I think that, people that think, okay, it's time to cash out and look for something else, I think that that's going to be the mistake that people make, thinking that it's a top, thinking that, they've made enough money and they want to get out. Because I think we're starting from such a low level. Even if, the stocks double or triple, you got to look at where they moved from, and where they, how low they actually were, relative to, past and where they're likely to go, because I think earnings are going to explode for these companies. And so I think the valuations, are way too low, that the market is not factoring in and crediting these companies for what they're likely to earn in the future, not just from today's gold prices and silver prices, but from the gold and silver prices that we're going to have in the future. I mean, I don't know. I mean, they barely even report on it, let alone pump it. Even today I was watching CNBC this morning, and this is when gold is up like $60. Silver's, still at record territory, up above 54.30 or something, or 64.30. And as they're going into a break, they say, oh, let's take a look at the markets. Oh, the NASDAQ. And they talked about the NASDAQ. Let's look at Bitcoin. And that was it. They didn't even bother with the precious metals. And in fact, I was watching yesterday, and they said, coming up, we're going to talk about Bitcoin and whether or not we're going to see a rebound next year. But they hadn't even mentioned gold or silver yet, because I was waiting for that. And gold and silver, they don't have to talk about a rebound. We're at record highs. So they're not even barely reporting on it. Yeah, once in a while they do mention a gold or silver stock, but they don't really encourage anybody to buy into it. They just kind of mention that it's gone up. They're still trying to, direct their audience to Bitcoin. So I think before CNBC even remotely starts to advocate for gold or silver, or have guests like me that come on, I never come on that network, but if they have people that are real, gold people, it's probably not going to be till after all the air comes out of the crypto bubble and the crypto community no longer can afford to advertise on CNBC. Because, right now they're trying to, pander to their advertisers. And I think the crypto advertisers don't want anybody focusing attention on gold, because they're trying to get people to buy Bitcoin instead of gold. And I think this is what's happening right now, and gold should be very problematic to the Bitcoin pumpers, because why isn't Bitcoin going up if it's digital gold, and if it's supposed to be better than gold? If gold is going way up, then Bitcoin should be going up even more. But instead, it's down as gold's going up. So they got no explanation for this other than, well, gold moves first and Bitcoin moves second. Well, who says? And why? I mean, why wouldn't it already be moving? If Bitcoin is going to move on the rate cuts and the return to QE, why isn't it moving now? Right? I mean, it doesn't make any sense that it just waits for gold to stop going up and then Bitcoin all of a sudden magically starts going up. It doesn't make any sense that would happen. Maybe that happened a few times in the past, but that might be more of a coincidence than anything else. I don't think it's a foregone conclusion that every time gold goes up, Bitcoin must go up later and must go up more. I think it could just come crashing down. In fact, the fact that it's not rallying is a good sign that it's about to go way down.
And we've got some pretty big moves in the markets. Gold starting to break out and run higher. We had silver post some pretty big gains. Silver has run all the way up, hit our 20% target yesterday, which was pretty exciting. And if we take a look at platinum and palladium, just insane moves here on platinum, up like almost 10%. It just continues to push higher, and we've got palladium up about 0.5% this morning. Platinum's up about 2%, 2.5% this morning. But we've got some pretty big moves going on in this space. If we go back and take a look at the equities market, so money was flowing into both equities and precious metals. Today, precious metals are relatively flat. We've got the indices kind of mixed. The S&P 500 here on the verge of breaking out to some new all-time highs. We have the NASDAQ. If we take a look here, it isn't quite near the highs. It's continuing to struggle. The Magnificent Seven have definitely pulled things down. We've seen a little profit taking in some of these growth stocks, but overall, it's starting to come to life. If we actually take a look at the Magnificent Seven, we have it's starting to really pick up speed and really starting to pop yesterday, which could start to carry over into the next couple of trading sessions before the end of the year. We could see something like this where it starts to gap and run and get that rest of that holiday rally. Now, when we go and take a look at the markets from a seasonality standpoint, December for the S&P 500 and for the NASDAQ, a little bit of a pullback. Here we are, and we've seen the market more or less bottom out this week over the last couple of trading sessions, and now it's starting to potentially have that push higher. And gold is in the same boat. It usually has a little bit of weakness at the beginning of December, and then we start to rally and push higher into the end of the year. So that's kind of where we're at in the markets. Now, yesterday we did enter a new position. If you're on our newsletter, our free newsletter, you would know about this, so you can take advantage of it. If you go to our website and scroll down a little bit, you can join this free newsletter so you're up to speed whenever we have a new trade issued. And of course, we've been hitting we've hit 3 targets with our silver trade, our SLV trade. And anyways, if you want to be up to speed on things, make sure you get on our free email list to be up to speed.
At this stage of the cycle, precious metal prices are still fundamentally undervalued. There's enormous demand waiting underneath the market, which makes deep corrections unlikely. Yes, sharp sell-offs will happen. But these moves aren't the start of a bear market. They exist to flush out leverage traders and short-term speculators who assume the market only goes up. These pullbacks are mechanisms, not warnings. When declines appear, they're likely to be fast, and rebounds even faster because buying pressure remains overwhelming. Now, if the broader stock market were to experience a major collapse, down 20, 30, or even 40%, gold stocks could initially get dragged lower as liquidity dries up. But history shows they often fall less and recover faster, especially when capital rotates into safe havens instead of government bonds. The key variable is gold itself. If money fleeing equities moves into gold rather than treasuries, it becomes extremely difficult for gold miners to stay depressed for long. Rising bullion prices re-anchor valuations and accelerate recoveries across the entire sector. And here's the real danger most investors face. Not volatility, but selling too soon. In long bull markets, people panic when they double or triple their money. They assume the top is in, take profits, and walk away, forgetting how low valuations were to begin with. Many gold and silver stocks are rebounding from historically depressed levels. Even after strong gains, they remain far below prior cycle valuations, while earnings potential is expanding, not shrinking. Future earnings will be driven not just by today's metal prices, but by where gold and silver are headed next. Meanwhile, mainstream financial media barely acknowledges what's happening. Even with gold and silver at record levels, coverage focuses almost entirely on tech stocks and Bitcoin. This matters. If Bitcoin were truly digital gold, it should be rising alongside physical gold. Instead, gold is breaking out, while Bitcoin is struggling. Markets don't wait for narratives to catch up. When an asset fails to respond to conditions that should benefit it, that weakness often signals deeper structural problems, not a delayed reaction. At the same time, we're seeing explosive moves in silver, platinum, and mining stocks. While exciting, this kind of broad enthusiasm is also a sentiment signal. Historically, faster-moving metals and miners often peak before gold itself. Speculative capital chases volatility first, then eventually rotates back into gold, the most stable store of value. This doesn't mean the bull market is over. It means discipline matters. Strong rallies can be followed by sharp pullbacks, sometimes wiping out months of gains, not because the thesis is wrong, but because sentiment becomes crowded. Markets don't offer certainty, only probabilities. The goal isn't prediction. It's position management. Those who survive and thrive are the ones who understand cycles, manage exposure, and avoid emotional decisions, especially near the most profitable phase of a bull market.
To not miss out. Now, if we take a look at the rest of the markets, we do have Bitcoin. Everything is moving up but Bitcoin. Bitcoin is really just floundering. If we zoom out the big picture of Bitcoin, there's potential that we're having a cycle low. Now, with that being said, the chart looks terrible. It doesn't look very good. It was giving this broadening megaphone formation we talked about way back over here. I said, don't touch it. Be very aware that this is a bearish pattern. It has broken down, and now it's putting in what looks to be either a bear flag, and it's going to go a whole lot lower, or it is going to try to carve out a bottom, but it needs to do a ton of work before it can build a new super launch pad to go a whole lot higher. The fact that stocks are going up, gold is going up, and Bitcoin is going down is a sign that it's lost its shine. I think I think a lot of gold bugs moved into crypto for a while, but now everybody's like, forget it, forget crypto. Let's just focus on precious metals again, and that's where everybody's at. Now, if we go and we take a look at, this is something that's really interesting, and I've covered this many times before with our paid subscribers. If we go back and we take a look at gold, silver, platinum, palladium, we can leave the miners. But what I want to show here is the yellow line at the top is gold. And gold topped out over here. in mid or kind of July, August of 2011. And what you're going to notice is gold miners actually topped out much sooner. They did push to a nominal new high, but nothing too significant. Silver topped out 6 months before gold did. We saw platinum also more or less top out around the same time as silver, and it really just traded sideways with some pretty big pullbacks percentage-wise along the way. And we saw palladium actually top out months and months before gold did. And so we're in this feeding frenzy right now where everyone is piling into all of these plays, and that is usually not a good sign. It's people looking for the faster moving metals. It's just there's nothing wrong with it. There's big returns to chase these because they could still have some big moves, but it's a sign of greed. People move into the faster moving stuff, miners, silver, platinum, palladium, when they start to run, and they forget about gold. And then eventually everybody these other metals will stall out, and then people start to move in, and gold continues to soar and move higher. And so that's the early warning sign. And that's kind of where we're at right now. We got everybody piling into anything metals and miners, and gold has been really just slowly kind of falling under the radar, just starting to break out. So that's what we need to be aware of. The sentiment analysis is very powerful in allowing us to know when big major tops are starting to take place, and it means we could see the precious metals start to run out of steam, which is not what anybody wants to hear. And of course, usually when everybody is against a move, everybody's long and excited about metals, that's when you get the most pushback, right? Nobody wants to hear anything negative on it. And this is something we've been talking about for months, or actually for a couple of years, waiting for this to unfold. It's finally starting to unfold, this sentiment of people piling into silver and miners and all of that first. So this isn't any surprise. This is something we know to watch for, and we know what it means generally and how the markets are going to react. And most people get caught off guard holding a ton of gold and silver and metals only to watch a ton of it get wiped out and give it back after. After these type of moves, we have seen pretty much gold pull back 34%, silver, platinum, palladium pulling back 60-70%. And not saying they're going to pull back that much, but even a 20 or 50% pullback or 30% pullback will be enough to scar a lot of people for a long time. The markets have been doing pretty much what we've been expecting. The markets are stabilizing. They're moving up into the end of the year for the holiday rally. We needed this little shakeout here. If we look, we were looking for this shakeout, this pullback in the market to run all of these little stops. We talked about that back over here when the market was trading sideways. They said, listen, the market is going to want to sell off 1.5% or 2%, or down below these lows to try and run all of these little pivot lows where people will have stops. We saw that the market got oversold. We saw panic selling, and then boom, the market starts to rally, and now we're pushing up, testing all-time highs. So the stock market's doing exactly what we have been expecting, what the charts have been telling us. I know a lot of people have been going through the roller coaster ride through this phase right here, this gap up all the way through over here and over here. People panic. They listen to the news. They listen to all kinds of people's opinions who really are just based on, they have a bias. I don't have a bias in the market. We just follow price action, and I tell you what it can and can't do every time, or what it could do, and we have a game plan for each direction. And I hear that all the time. People are always like, well, you didn't really tell us much. You said it could go higher, it could go lower. If you listen and read in between the lines and follow along, it can always go in either direction. And I know a lot of people out there, they just want an answer. Do I buy it? Do I sell it? Where's it going? Just tell me where it's going. And nobody knows. That's why we navigate it and we manage positions. And again, if you want to copy our trades, like our accounts are pushing up to all-time highs. The markets are moving. We're in all kinds of different trades right now. It's very exciting.
The message from Schiff and Vermeulen is clear. The biggest mistake investors make isn't buying too early. It's selling too soon. Volatility will test conviction. Media silence will create doubt. But history shows the real wealth in precious metals is made by those who stay disciplined while others get shaken out. If you want to stay ahead of these shifts before the headlines catch on, make sure to subscribe, like the video, and stay tuned. Because when this cycle finally goes mainstream, most people won't be positioned. They'll be chasing.